David Jones, I'm Chief Market Strategist at IG. Out of all the various currencies you can trade, and there are potentially hundreds, euro-dollar is by far and away the most widely traded in the real underlying forex market, and of course, here with us, with spread betting, and the fact that it's the most widely traded means you have the tightest spreads, that the cost of actually trading is very small in something like euro-dollar. There are plenty of things that will move euro-dollar around during the day, obviously news out of the Eurozone, whether it's good or bad news to do with their economy, their debt, news out of the US, if the US economy starts looking a little bit weaker, we may see dollar weakness. So there are plenty of things that will buffet that particular currency pair around during the day. I think it can be a temptation in the beginning to look at maybe some of the more exotic currencies, which is fair enough, but you need to bear in mind you'll pay a wider spread. I think if you're looking at starting to trade FX, euro-dollar is the logical place to start. Definitely, here with us, it's out of all the hundreds of currencies we quote, euro-dollar is by far and away the most widely traded, matching the reality of the underlying market, where it's responsible for, I think, something like 50% of trades. It's a number like that, After indices, the forex markets are the most popular amongst clients, and it's easy to see why. We have plenty of volatility in FX markets. Even on a quiet day, you'll still see something like euro-dollar move in a 50-60 point range, even when there's nothing going on. When news does start to break, these markets can easily move more than 100 points a day. So it's the volatility that appeals to people. But it's important to bear in mind that the volatility is a double-edged sword. I think if you were starting to spread bet, then starting to spread bet on foreign exchange, is maybe too much of a big step in the beginning. I think the problem is you can get just taken out with the volatility if you're trading with really tight stops. If you're trading sort of 5-10 point stops, you'll just get taken out time and time again. So I don't think people should be necessarily afraid of foreign exchange markets, but they should understand that they're fairly volatile even when markets are quiet, so you need to give the market time to move around and time to prove you right. Trading with really tight stops can be very frustrating, where you end up getting taken out an awful lot of the time. I think it is. I think the fact that it's open 24 hours and it's a true 24-hour market with normally plenty of volatility around the clock, is a big appeal for people. If they really want to get up at 2:30 in the morning, log on and trade, there will probably be something going on and something moving around. So that is an appeal. And I think it's something we've just become more aware of in recent years. Foreign exchange, because of the troubles the Eurozone had. Because of the pound, the problems we had with the banking system, and people losing confidence in the UK. There was plenty of volatility back then, and currencies were making the news on a regular basis. So I think it's something that today we maybe all have an opinion on, whereas 20 years ago we wouldn't have done. It's not necessarily the right opinion, but we do have an opinion, and there are plenty of ways to try and take advantage of that.